Mike. Today we're going to be talking about our reasonings on why we're looking for long positions on the NASDAQ. And some of the things that can help weigh us in on this decision was things like the $1.7 trillion spending bill that was passed. And, we're really focusing in on these areas down in here where price really showed willingness to move higher. Okay, and so when we get to the 4-hour time frame, we can see this institutional sponsorship candle, that last down candle that attacks liquidity, and then really shows willingness to go higher. We can see it again here, right? That last down big candle for that push higher. And so this is the area that we are playing around in. But we want to see inside of these areas, where did price inefficiently deliver in the past? Where are these big imbalances at? So when we go into the 1-hour time frame, okay, remember this is that last down candle, and this is that last down candle. And some of the lingo you might hear about these candles is a sniper candle or an institutional sponsorship candle, but it's these engulfing candles that run on liquidity and then reverse. Okay, because big money, when they position into the markets, they are doing it in a slow, efficient manner. And they are basically dollar cost averaging in because they can't execute their full positions unless the order book can handle it. Because if the order book can't handle it, you're going to get large moves that show those inefficiencies. Okay, so they have to be very selective with how they position into the markets. And so the last time, right, you saw this large down candle and that big imbalance inside of it. And then balance was filled here. And then the balance was filled 100% when it revisited it. Okay, so you have this imbalance inside of here. Imagine big players positioning all inside of this area, and this is as far as it went last time. So this is how people are judging that low, and so liquidity will bunch up under this low, and then you have that revisit, reaccumulation underneath that low, basically filling in the inefficiencies from the past. And so the same kind of practice is being done here, right? You have that last down candle attack on liquidity multiple times and then push higher. And now you have this imbalance right here that sticks out, and also this large wick right here. So lots of money, lots of orders, lots of liquidity will bunch up underneath this low here. And the goal and how things work is this is where price was not able to get a lot of orders on the sell side right in here. It was just all buys. So you engineer the markets to have lots of resting liquidity in that area, so when price attacks it in the future, all of these people that played anywhere inside of here, if their stops are underneath this area, this is where they go. Okay, and so basically smart money, big money has just been accumulating inside of this area for a while. And so now this, if we were to mark those two imbalances up real quick, just to help train y'all's eyes, this is where price was attacked down to and then reaccumulated in here and then pushed higher. So now you have all of this trading activity happening, basically doing what? Creating more equal lows and liquidity to attack before what could potentially be a up move that we want to see. Okay. Now inside of this area, we can go on the 4-hour time frame and see the imbalance that's in there as well. So this is where we are for playing for the first week of 2023, and we have this imbalance inside of here, and we have these lows for liquidity. And this week is special, right? There's FOMC and then there's NFP on Friday. FOMC really didn't do that much, but as you can see, NFP really ran on Friday. Okay, so before the move on NFP, this is how the layout is really happening. So we want to locate where we want to play what we see prior to the news. And so prior to the news coming out at 7:30, which is this area right there, what do we have? Well, for Friday's London session, all the way up to pre-New York, all it's done is create equal lows. Okay, so there is a potential to where you can get a false run on liquidity and reverse. Think of it as our accumulation setup, to where you have equal lows delivered in an efficient manner, and then you have the spring setup. Okay, and then we have all of that past imbalance that we saw on that 4-hour, and this is the respected area that we want to pay attention to. And so as you can see, that's the kind of move we got. We got our down candle play to where we can enter inside of there, and then NFP gets presented and price just flies in 1 minute. And so as you can see, with here's the equal lows, and then here is the attack down prior to the news. Okay, look at how price traded. You've got 4 minutes of back and forth up and down candles. Finally, you have a minute of an up candle, and then we go sideways, and then we reach up, and then we come back right before the news, fill in and balance, and then flies. So whether or not you wanted to risk anything on this first entry, okay, stop below the low, and there you go. And so what was special about this setup is not only did you didn't have to play before the news, you could have played the retest of this area, and how price delivered back made it efficient and mitigated out of the candle that caused all of this. Okay. And so remember, we like to attack the direction of liquidity. Okay. All of the liquidity to the downside has been attacked. This has been ran low, these have been ran low. This is all efficient, and this is the areas that price ran the equal lows and just ran out people. Versus the other way, to the high side, you've got a lot of resting liquidity that never got ran out of. And we can see this on many of the smaller time frames. So here's a 15-minute to where you have equal highs here. You have this large imbalance up in this area. Okay, so, if price is going to continue lower, some of these areas are easy to grab, shorts right here, so lots of liquidity will bunch up there, and then price is just all wasted right here because not a lot of people were buying, it was just all sellers. So if price is going to continue lower, this is just a wasted space for large players that were wanting to get themselves out of a position. Okay, so you've got trend line liquidity that'll bunch up here. Basically, we're identifying where are the easier spots for the masses to identify and lock themselves in at. And obviously, the hardest place to play is on the buy side because buys just keep getting ran out while sell side is not being ran out. The liquidity has stayed intact. Okay, so now all of a sudden, off of your first push down, that first entry went higher. This is areas to target for partialing or just getting out of the market in general. Okay, this is why this green magical line was drawn, showing partials, showing TPs inside of this area. And what was really awesome is the opportunity that presented itself later. So as you can see, price, after hitting this trend line liquidity, after hitting this equal high liquidity, after hitting these imbalances, price sold back off in this area. And so when you really go and look at small time frames on the move that happened prior or for the news, you can really see this on the 1 minute, but just look how inefficient the market is in here. You have equal lows right there, right? So liquidity build up on how price just reaccumulated right in here. Liquidity build up, price goes up above a big wick, right? We know big wicks have liquidity around them because if you think about it, a giant sell order came in here and it didn't spend a lot of time up in there. And so to us, it looks like a big wick, but that's what's really going on in the behind the scenes. Price hit that area above those equal highs to the left, and then a large sell order comes in and doesn't spend a lot of time up there and closes down here. So people that are viewing this see a large wick, and really it was just a big sell order here, and then more sell orders came in as well inside of there and got delivered right back down underneath equal lows. But the special thing, right, is our biases to the upside, right? So price gets pushed all the way back down. Now the market is efficient. You didn't have to go into small time frames to figure this out. You could have literally just, if you didn't play the news, that's fine. Now you can play the mitigation of our institutional sponsorship slash sniper candle. Okay, that's the easy way. That's the lazy way of doing it because your best way of being able to yield your highest R&R potential, right? And here's the second entry. Okay, same thing, different entry, now using that 30-minute candle to now go higher. That was that first TP from the last time. Now we're getting above into the next imbalance area and potentially taking the high out. And when we look at where potentially this can run to as far as liquidity goes, you've got easy identifiable equal highs here. You've got large imbalances up in here as well. You've even got big wicks above here. This can run all the way back up into this area before we see a continuation back down to take out big wicks and equal lows. And that could be where we find our next large macro swing potentially. Okay, so come back to this video. We'll see if it works. That's would be where my two areas of interest to pay attention to would be is up in here in that imbalance. Basically, it's that last area to where price pushed up, clearing liquidity, and then sank. You know, so depending on what comes out fundamentally, that would be the two spots. Can we get a sell in here to take out these lows, equal lows, or is it going to clear this wick and this is going to be that focus point to get us a large sell-off? But regardless, now we're writing buys and we're talking about buys, and the best potential way of locking in this buy was that retest back on that 1 minute. So it's, the 30-minute should be up here. The stop is a lot wider, but if you were to do it just off of this candle alone, that R and R would have been nasty. You didn't even have to trade there. You could have found a position up inside of here off of this candle as well. Okay, but there was many great opportunities that presented themselves as well. Our nice little trap candles that we love to position ourselves into as well stuck. So there was lots of great entries for order flow to the upside, and yeah, great entry, great payday. NFP was amazing, but hopefully you received some sort of breakthroughs from this video. So if you liked what you saw, give us a like on this video, give us a hit the subscribe button, and we'll see y'all next time for the next video.